So the market's pulled back the last 2 days, and not much has really developed yet. We're kind of just waiting to see at this point if we can start breaking down below some of these moving averages. You can see today we bounced right off the 10-day exponential moving average, and that's really going to be the first challenge for the market. If it can break down below that level, then we're talking about potentially opening the door to something a little bit steeper back to the 20-day moving average, and then we can probably try to reassess things from there. But really more interesting is what's happening in gold at this point. But before we get too much into gold, let's please remember to subscribe to this channel, like this video, share with your friends. Again, I need your support to continue to grow. The reason why I think this is an interesting period of time for gold is because of how overbought it has gotten on so many different levels. You can see right now the RSI is still around 72 on the daily chart, but when we take a look at the weekly chart, right now we're at 75.3, which is a pretty high reading for gold, no matter, what time frame you're looking at. But really interestingly is that if you go back and you look at the monthly chart, you can see gold got up to around 89.36 today. And that's a really high reading. In fact, you have to go all the way back to, a period in time around 1980 to find a higher reading in gold. And what's really important about this is because, after we got to this high level on the RSI, you can see gold didn't do anything until about 2007 again. So basically, if you had invested in gold in 1980, it took you to 2007. So it's not to say that, gold can't continue to go higher here, but I think it's really important to realize that you're at an inflection point in gold, and you would think at this point it either is due for some sort of pullback or maybe some sort of sideways consolidation. I think it's also important to realize that not only do we have a really high RSI, but you can see we're testing the upper Bollinger Band on gold as well. And if you compare that to the 1980 time frame, you can also see that the similar happened during the 1974 and 1973 period. You can see the RSI got up to around 94.7, and even in that period of time you could see gold came down. If we just look at this period of time, this was a 6% drawdown, that was a 10% drawdown, and another 3. So you had almost a 20% correction in gold before it ultimately ended up going higher again. And you can even see in this period of time you had a 2%, a 7%, and an 8%, so nearly a 17% correction in gold before it ended up going a little bit higher again. And then you ended up going all the way back down to just $95 from $187 in 1974 to 1976. So, I mean, when you're buying, it looks like when you're getting involved in gold at these type of levels, it kind of suggests that you're due for some sort of pullback, correction, sideways consolidation. I think it's pretty risky at this point in terms of gold going higher, at least over the near term. It doesn't mean that it can't go higher over the longer term, but these overbought conditions seem to signal we tend to see some sort of pullbacks. Here in 2006, we traded sideways after the RSI hit 84. Here we hit 85.8. We ended up going from around 1,000 all the way down to 720 or so. And then here we had another little spike into 2011, and gold ended up doing nothing really again until about 2020. So there was obviously the big breakout that occurred, but again, it's looking like we're pretty overbought. Even more recently, we saw gold get up to around 82 on the RSI, and we had a 3% and a 1%, so about a 4% decline even in 2024. So it's not to say that gold can't go higher here. It's just to say that, you run the risk of having a pretty decent sized correction or a period of sideways consolidation up ahead. One thing I think you also have to pay really close attention to if you're going to be looking at gold right now is where rates are, because it looks like we're starting to see some upward momentum in Treasury rates. The 10-year rate today looks like we formed a bullish engulfing pattern on the 10-year. This could be suggesting we're looking to move higher. You can see the RSI clearly starting to trend up. Here, I would say this is like some sort of resistance zone in here around 51. So if you get above 51 on the RSI, possible here that we start seeing, 10-year rates move back up into this 430 level. Here's your 20-day moving average. You can see we've cleared that. Again, it looks like even the upper Bollinger Band's up around 427. So this to me looks like the 10-year could probably move back up into this 430 range over the near term. And also the dollar is showing some signs of strength as well. You can see the dollar today, it looks like it broke out above a trend line. Here you can see that trend line, a clear breakout. RSI clearly trending higher. It looks like maybe we're putting in some sort of inverse head and shoulders pattern on the dollar index, or maybe even a double bottom pattern starting to form right now. We would need to really break over 100 for confirmation on the double bottom, but again, it looks like we're starting to see some strength developing in the dollar, which is surprising because we know that the Fed is likely to cut rates, and we know the BOJ is likely to raise rates. But it looks like the yen is finally starting to give, breaking out of this range, and this would suggest the yen weakens versus the dollar, and we could see the same thing happening with the euro, with it breaking below this trend line. So it's very possible that we're going to see this pain trade I've been talking about with members in the YouTube member area in the videos there, about this pain trade that could be developing, where, you know, the pain trade being, you know, higher rates, stronger dollar. And, you know, again, when we talk about some of the things going on in equities, it's really more so about where volatility is at this point, because the VIX obviously fairly low. We're seeing, you know, individual stock level volatility fairly high. Also, we're seeing realized volatility levels really compressed. So there's a good chance here that we're going to see the pain trade, which would be, you know, higher volatility levels in the stock market, lower equity prices, higher interest rates, stronger dollar, maybe weaker gold. And those are sort of against consensus. But again, we're just looking at the charts and trying to make some informed decisions based on the information we're looking at. Anyway, I hope you remember to subscribe to this channel, like this video, share it with your friends, and we'll see you again soon.